reported a net profit of 817 odd crores. We are waiting by for what the consolidated numbers of Tech Mahindra will be, and we'll just give them out in a bit. For now, the expectation was that it is expected to be a very muted quarter for the company. Remember, the company had also issued a profit warning in the quarter gone by, and there's been a significant derating of the stock that we have seen in the quarter gone by for Tech Mahindra. In fact, since the start of the year, Tech Mahindra has been one of the biggest disappointments from the frontliners. It's down about 20% or so since the start of 2015. So we are awaiting more details on what the dollar revenue figure is for Tech Mahindra. For now, these are just the standalone numbers. Dollar revenue growth expected to be not too much, in fact absolutely flat at $983 million. So that's the key number to watch out for, and we are expecting a decline in the margins. That's something that the management had alluded to in the quarter gone by, both a decline in the revenues and the margins on a quarter-on-quarter basis. So that's something that the street is prepared with at this point in time. It's been a very disparate performance for the entire IT sector. On one hand, you had very good numbers coming in from Infosys. On the other hand, muted performance from TCS and Wipro. So let's see what Tech Mahindra delivers. The stock has been holding up this time around in anticipation perhaps of not so bad numbers. But for now, these are the standalone numbers flashing for you on your screen. Total income at 4,950 versus 4,707. So that's a sequential growth on a standalone basis. But the stock will, of course, react to the consolidated numbers that the company announces in just a while from now. We have seen a seasonal decline in Comviva this quarter, and that would actually result in lower numbers for the company on a consolidated basis on the dollar revenues. And also, we are seeing some amount of impact on the margins because of higher visa costs and the Comviva seasonality. This is despite no wage hike that we saw in Q1. We are still expecting the margins to be a bit weaker in this particular quarter. So let's see. For now, we just have the standalone numbers. Anything else that you're picking up?
No, nothing, Sonia. Still, you know, the stock was up quite a bit, and at least the standalone number is telling us that even the console number should be a bit of a beat on the estimate, and that's all that we can say at this point in time. I mean, the market was telling you that it expected decent numbers. Keep in mind, it's a stock which is corrected, what, 35%? More than that since its recent highs. From being the best IT performing stocks, it's become the worst IT performing stock. So that's all we can say. So let's do one thing, Sonia. Let's wait for consolidated numbers, and till then move on.
Oh yes, let's get one comment in from Inox Wind. Beat on the net profits that you can see for Tech Mahindra. The poll was a growth of 27% quarter on quarter, but this has beaten with a growth of almost 35% on the net profit front. That number should just come up for you, 676 crores. And that's something that the street was, I think, smelling through the course of the day. And that's why the stock was bucking the trend.
Yes, Sonia, clearly it was bucking the trend. And it will be interesting to see if this entire 60 crore top line growth beat has exactly, trickled down to the bottom line. Clearly, there would have been either margin uptick of more than what we expected, or one or two extraordinaries as well, because the net profit number, clearly, even if you were to assume the entire consolidated rupee revenue beat to be transferred to profit, even then it's higher than that. So let's wait for the operating numbers as well.
Even the EBIT has come out, Anuj, 762 crores, which is higher than estimated. The estimate was about 690 crores on the EBIT front. So this is a good 60-70 crores higher than estimated.
Yes.
And, it compares to 756 crores last quarter. So there has been a growth in the EBIT versus an expectation of a fall. So that will be taken well by the street. Sarabjit Kaur Nagra of Angel Broking joins us on the phone line from Mumbai. Sarabjit, the numbers look at least better than what the street was estimating. How would you react to them?
Yeah, it's slightly better than expected, especially for us on the bottom line. Primarily, whatever I've seen, I think revenue front marginally better, EBIT again marginally better, but net profit significantly better. I think it has to do more with other incomes. So I think this is how broadly I read the numbers as of now.
Okay, rough calculation would suggest that the EBIT percentage margin would also be 12.1% versus 12.36%, but the decline was expected to be more, about 11.08%. Sarabjit, good afternoon. So, we've seen the stock outperform today. Do you think, based on these numbers, there's a bit of a rally tomorrow morning?
See, the thing is that the stock had already collapsed after they have given a warning. And they have indicated, if going by their commentary, last commentary that they have made, it is suggested that Q3 is something they're looking at stabilizing their business in terms of Q-on-Q growth. So probably, yeah, some move might happen, and depending upon the valuations are pretty attractive. So probably from here on, if they continue the uptrend, at least in profitability and other parameters, till Q3, I guess, yeah, there should be a reason for the stock to move upwards.
All right, those are the dollar revenue numbers, by the way. They have come in just in line with estimates, $989 million, which is just a tad bit higher than the 983. So this is a flat performance that we've seen on the dollar revenue front, no growth at all. But this is something that the company had said and that the street was expecting. So this doesn't come as a surprise. Stay on, Sarabjit. Gaurang Shah is also with us. Gaurang, the operational performance, although the margins have fallen quarter on quarter, they're not as bad as as perhaps the management was expecting. How would you react to these numbers?
Well, Sunay, first let me give you a disclosure. We do have a positive coverage on Tech Mahindra. Our earlier targets were set aside at 710, but post the profit margin issues which the management gave out, we reached the target to about 560. What we understand is that the correction in price was already there given the profit margin issues that the company management had given out, and our sense is that the acquisitions which the company has made should build up synergies as we go forward from here on. As they integrate with the business, the top line and bottom line visibility should be much more better in the following second and third quarter. However, I would like to see the other income component, which
it's quite high actually. The other income, yes, the other income is very high, and that's one of the reasons why perhaps the profit looks better. 137 crores in terms of an other income figure. Just stay on. Rima's also with us, so she'll give us a quick wrap up of the numbers. Rima, over to you.
Well, Sonia, prima facie, these look like a good set of earnings. The company has delivered a revenue growth of 0.5% on the top line at $989 million, slightly better than what the street was anticipating. And this is better than what the company themselves had indicated. In the pre-quarter announcement, business update, they indicated that we will see a marginal decline in revenues as well as margins. So we had expected revenues to be flat. Compared to that, they've delivered a bit of a growth. Even on the margin front, the decline has only been about 25 basis points, coming down to 12.11% at the EBIT level. Again, this is better than what we were anticipating. We thought the margins would fall by close to about 100 basis points. The key reason for the big jump in the profitability of about, the profits, remember, have gone up by 43% on a quarter-on-quarter basis is largely because of the other income component, which contributes a swing of close to about 200 crores. So the other income is a gain of 136 crore versus a loss of 65 crore on a quarter-on-quarter basis. So the rough numbers that we have suggest that it's slightly better than what the street was anticipating. And remember, the stock has also been moving up in the month of July. It had hit a 52-week low of 458, if you remember, on the 6th of July. And from there, the stock is, come up to levels of about 500. So that's a recovery it's already seen of close to about 13 to 14% from the lows that it had seen in the early part of July.
Rima, just one follow-up question. Is there anything in these numbers that will merit the stock moving up substantially higher, or do you just expect to see a relief rally tomorrow?
Well, we see the stock could go up tomorrow because EPS estimates could rise because of the big swing that you're seeing in the profits. So because your profits have beaten expectations by such a margin, there is a possibility EPS estimates for the full year could go up, and that could drive the stock to, do well. But for a significant uptake for Tech Mahindra from here on, you need a twofold improvement in the fundamentals. One is on the top line, where it's still, just a growth of nearly 0.5%. It's lower than all the peers. Now, forget a TCS and Infosys. It's even lower than a Wipro, where the growth stood at 1.1%. And remember, Tech Mahindra has the added advantage of a lot of acquisitions that they've done. So, for instance, in this quarter, Livebridge Communication, LCC, would have given incremental, revenues of about $10 to $12 million. So, despite the benefit of the acquisitions, their top-line growth this quarter is actually far lower than what peers have reported. So, you need to see a substantial pickup in the top line for a significant upside. Apart from that, secondly, even on the margin front, if you remember, Tech Mahindra's margins just about 7 or 8 quarters back were at levels of over 20% in EBIT, which is where most of your peers are operating. And Infosys, Wipro and TCS are at 20% plus margin, whereas at Tech Mahindra, maybe because of the investments, maybe because of the deals they're doing, are at lower margins. They've seen their margins contract to 12%. So a significant, for the stock to go up significantly, you need a big jump in the dollar revenues as well as a pickup in the margins, which is not absent. Though that said, it's better than what the street was anticipating, so there is a possibility stock could do well today.
Okay, Reema, thanks a lot for that.